Good afternoon and welcome to this edition of Closing Bell. It was looking like it's going to be stabilizing a bit today, and we were poised to snap out of a 3-day losing streak, but that was not really to be, given the fact that all the gains that we saw after a week open completely petered out, right? We did reclaim that 25,900 mark on the index, and that too after touching a low of 25,726. That's the intraday swing low on the Nifty. Staged a good comeback from there and looked like things would stabilize a bit after a three-day sell-off, but we were kind of petered out once again, and we did take out the 25,800 mark again, but we are just about around that 25,800 level. Even for the broader end of the markets, they were showing good strength. They are off the day's high, but nevertheless, the Nifty mid-cap index is trading with gains of somewhere about 0.5% or thereabouts. In terms of breadth, it has improved slightly. Initially, it was 1:2, but now it has improved slightly to 2:3. 1124 advances to 1771 declines. Nevertheless, it's skewed in favor of decline. So yes, pain in the broader market continues. Although the mid-cap index is up somewhere around 0.5% or thereabouts. The Nifty Bank index also saw very good, up move somewhere around midday. We clocked in levels of 59,200 or thereabouts. But once again we petered out there as well, and now we are just about around that 58,950 mark or thereabouts, just about 25 odd points higher for the Nifty Bank index. PSU banks are taking a breather. Mind you, in the last 6 sessions, we've had 5 sessions where PSU banks have gained. But today some bit of profit taking there. The index is in the red as we speak. But IT, that's the clear outperformer today. A 1% gain on the Nifty IT pack. TCS, that's the top gainer on the Nifty IT index, 2% up. Of course, it has declared its AI revenues. And of course, spoke a little about margins and how it plans to be the leading AI services play in the country. That's also another thing. So that was those are the comments that the company made at its analyst day post market hours yesterday. The stock taking heart from the comments and of course reacting to it. And brokerages have also reposed their faith in the counter, and they have come out with higher target prices and buy calls, most of them. Aside of that, real estate, that pocket has been beaten black and blue. But today, some mild recovery there. That index is up somewhere around 0.5% or thereabouts. Metals, after down day, they are once again back in the green. In fact, PSU banks have edged back into the green as we speak. It's up somewhere around 0.2%, the PSU bank index. But what's not doing well today? Autopack, that's down 0.5%. You have FMCG. FMCG saw good traction in the initial part of the week, but some bit of weakness there today. Pharma as well, not doing well. Sun Pharma, among the big laggards today. One of its units have come on US FDA radar, so that's keeping Sun Pharma under pressure, and in turn the pharma pocket is in the red. But there are quite a few movers in the pharma pocket, as pharma index as well. Biocon, Wokhard, Mankind, these are some of the counters that are gaining despite the pharma index being in the red. In terms of individual movers, quickly want to point out a couple of gainers before we bring on board our experts for today. Interglobe Aviation, that's managed to edge past TCS, and in fact it's the top Nifty gainer, 2.6% higher on this stock. In fact, it has been gaining over the last 4-5 sessions. TCS 2%, Max Healthcare, there was a big laggard yesterday, staging a comeback. Infosys, Tech Mahindra from the IT pack doing well. Some names like Hindalco also on the gainers list. Shriram Finance in focus. The stock hit a record high. Tomorrow we have the board meet, wherein they will consider fundraising as well. So ahead of that, Shriram Finance has been on a gaining streak. Flip side, what's not doing well, as I mentioned, Sun Pharma 3% down almost. Some of these consumption names that have been doing well in recent times have come under some bit of selling pressure, the likes of Asian Paints. Bharti Airtel has also been doing well recently, but today it's under pressure, and so are the likes of M&M, L&T, Bajaj Auto, Ultratech Cement and Tata Consumer. All in all, texture of the market, not looking all that encouraging right now, given the fact that it's Sensex expiry. A fair bit of volatility was expected, and that's what is really playing out when you look at the market. But to understand the market trajectory, let's take stock of some of these stocks that are in focus today, right? Bringing on board Ashutosh Mishra, head of research, Ashika Institutional Equity. One thing I didn't point out is the fact that AMC stocks have been surging, right? In the likes of HDFC AMC, UTI AMC, NAM India. All of these stocks are, rallying anywhere between 5 to 8%. Of course, sweeping changes to mutual fund rules that were announced by SEBI last evening. Of course, a lot of experts say that a good balancing act was done by SEBI, and we are seeing some of these capital market plays take off in today's session. Total expense ratio, Ashutosh, has been redefined as basic expense ratio. So the cost structure now stands like, basic expense ratio plus the taxes plus brokerage fees. And this will, of course, bring about more transparency in the fee structure as well. But what kind of impact do you think this will have on AMC's profitability?
Thank you for inviting me on the show. If you look at AMC profitability, it will not have any major impact if they have taken the decision as per the discussion paper. Then it had impacted a very severe impact on their profitability. But now SEBI has recommended very diluted form of that, and only negative impact I see that where in some for the exit load where they are charging 5 basis point, that will have some impact on AMC. Apart from that, I don't find that any major impact will be there on the AMC. AMC earnings has a multiple levers. And if we put together the impact of that, it will be not more than 3 to 5% in my view, and that's why that can be easily managed by the AMCs in the coming years, and that can be also compensated by the
Okay, so
volume growth.
what's the outlook here?
So
Okay, sure.
outlook
Volumes,
is,
of course, will offset any kind of
yeah,
negative impact that it will have.
yeah.
Sure, go ahead.
So yeah, so if you look at just one of the AMC is getting listed and the type of response which we are seeing, it is clearly indicating that the way investors are looking at this sector. So I am quite positive on the Indian AMC sector. We are just started the financialization of the saving, and in that journey, if I say we have just traveled a few years into that part of it. A long ways ahead of us, and still valuations is quite reasonable for the whole sector, and that sector is a very capital efficient sector where they don't need any additional capital out there. So keeping that in mind, I see a healthy return, a consistent healthy return can be generated by investing in the AMC.
Okay, healthy returns can be, of course, availed of by investing in AMCs. But brokerages will also be impacted, right? First of all, they are relieved that it's much better than what was proposed earlier in October. But they'll still be collecting less in terms of brokerage fees, right? Plus, there's still a lot of uncertainty on the F&O side as well. There's still a question mark over, weekly, fortnightly expiry. How things will pan out on that front. So, will profitability on the whole for the brokerage space come under pressure, and how will they really maintain it going forward?
If you look at it will have some impact on institutional brokerage part of it, but if suppose compared to the 12 which was in discussion paper was 2 basis point, compared to that 6 basis point is a very reasonable one. If we have done internally also and tried to understand from the various other brokerage, normally the numbers is around no current net revenue is around the 6 basis point for the many of the brokerage, domestic brokerage, which are listed entity at this point of time in the market. So there we don't find any major impact. And one thing we need to keep in mind that no, currently volumes are very low. If suppose next financial year we start seeing the volume start again going up, then probably no, we will be the whole thing will get compensated through the increase in the volume.
Okay, okay, got your point. But let's discuss some of the other pockets then. Insurance, major reforms, of course, taking shape with the, insurance amendment bill that was cleared in the Lok Sabha and the Rajya Sabha as well. Government has, of course, opened the floodgates for foreign capital, but composite license was not really taken up. How will things change for the sector in terms of growth and competition? And what's looking more exciting to you after all these reforms, life or non-life?
I still like a non-life piece much more. We know that from FY27 IFRS will come and there can create a lot of uh, you know, uh, especially on clarity how the things will be accounted in other part, especially for life insurance. So I will be more comfortable with the non-life insurance at this point of time, and clearly see no the impact of the competition is also relatively less in that part of the segment. Even if suppose the any foreign entity want to start the business or acquire some existing entity out there, I see a relatively less impact on the non-life part of it. So more preference toward that segment.
All right, tilting more towards non-life insurance players. But let's talk about one pocket that's in focus today, and that's of course because of TCS, given the fact that it has quantified its AI revenues for the first time, and I think the street is really excited about that. Over $1.5 billion coming in from AI revenue, 16% quarter-on-quarter growth. And of course, the company also said at its Investors Day that it is looking at becoming the world's largest AI-led technology services company. Of course, in AI, in fact, AI revenues are growing faster than their overall revenues as well. Looking at this, would you say that Indian IT is poised to see a boom when it comes to AI services, as was pointed out by some experts in recent times? And is this, the best poised, is this stock rather, TCS, the best poised within the large cap IT pack, or would you look at some of the other names like Infosys, Tech Mahindra as well?
If you look at just on AI revenue, we clearly see that Indian companies has a lot of scope to deliver, or to take benefit out of this whole AI spending across the companies out there. Yes, there was initially some worries, which is now getting subside. Industry is also expecting that they need a manpower who can efficiently use the AI there. So with each technology upgradation, what we have seen over the last 30 years that IT company has upgraded themselves and has taken benefit out of this whole transmission, transition from the one technology platform to another technology platform. And I think that the similar thing will happen with the AI. Yes, today TCS has quantified it, and this segment will definitely grow much greater. If you can go back and just remember when many of these companies start reporting their digital revenue, digital was growing much better than their traditional source of revenue. Similar thing we will see in the AI part of it, and the scope is very huge for the AI, at least in the next 2 years, I think so. Uh, and it if you look which company will get benefit, it's very initial period at this point of time. I think everyone is investing, everyone is trying to be in that part of it. Let's wait for some time before making judgment on that part.
Okay, we need to wait and watch as to how other companies, of course, how and or when the other companies also disclose
Yes.
their AI related revenues. But, from the mid-cap IT space, Cyient has been making headlines as well. It has made a new acquisition of Kinetic Tech. What do you make of it? Do you think this transaction will be EPS accretive, from year one itself, or what is it in your assessment?
So especially mid-cap IT companies are very sweetly poisoned, placed in this whole IT part of it. If you look at whole US visa issues and other part of it, from 2020 onward, when work from home and other things started taking place in a bigger way, and client started accepting that no, things can be delivered even from the offshore unit. If it can be delivered from work from home, it can be delivered from the offshore unit also. Then many of these mid and small IT companies has seen a major client wins on that front, where they were really able to compete with many of the large IT firms. I think this trend will continue, and many of these IT company has also did very smart acquisition all across. So I think this thing is playing out very well for the Scient also. Seems to be a good acquisition at this point of time. I have not done detailed maths on that part of it, but yes, it seems to be a good acquisition, good addition to their no current portfolio.
Okay, good addition to their current portfolio. In fact, Cyient in its con call mentioned that this acquisition will be EPS accretive from year two and a bit accretive from the first year itself. And of course, they are confident that it will help in delivering high sustainable margins as well going forward. But from IT to autos, some bit of selling pressure on some of these auto names. But today we had a downgrade coming in on a Hero from Jeffries. What is your sense? Do you think the good news in terms of the GST reforms is already priced in when it comes to two-wheelers? Because for Hero Motocorp in particular, there has been a market share loss in the month of December. So has the GST-led demand boost started to wane, and is the stock looking expensive, especially after the way it has rallied this year, 40%, and since August 14, when PM Modi hinted that there will be GST reforms, the stock is up in excess of 20%. So do you think all this is priced in, or do you think this is just a corrective phase and it will pick up steam even further? What is your sense?
So yes, IT auto sector has seen a very sharp run up post the 15th of August Prime Minister's speech out there, and many of these positives are already in the price. We have seen a very sharp increase in their volumes, and with this higher base, probably next year will be a bit difficult for them. But if you look from a cycle perspective, I think auto is also in a very large cycle where they will be able to deliver much healthier return, especially on a passenger vehicle part of it. Next year, we will have another major event coming in the terms of the, I think, central government pay commission revisions will take place, which is also one of the bigger trigger for the auto companies. We have interest rate, which is no, at a historical low. And if suppose another 25 or 50 basis point rate cut
Hmm.
comes, it will be further help the whole sector out there. Rising income, another part is playing out. So I think it will be more played with a passenger vehicle and a commercial vehicle, followed by the two-wheeler. Two-wheeler, we are seeing definitely, I know, technology disruption is very high. Although Ola is today at, I think, life lows, stock is there,
Hmm.
but no, technology disruption is much higher on that part of it. But Hero has seen a very sharp run up, and some moderation from here we can see about that part of it. But as an auto sector as a whole, cycle I think is going to last for another 1.5 2 years. Not, it is not going to be so short-lived cycle which has started from the GST cut.
Hmm. Okay, okay, got your point. But talking about another rate sensitive sector, that's the real estate sector. It hasn't really been able to fire up despite all the front loading of rate cuts, this recent rate cut as well. The real estate index has taken a 20% knock so far this year. Last, if you look at the 1 year comparison as well, it's down in excess of 21% or so. What's ailing this sector, and what would it take for this sector to really fire up, because home loans are getting cheaper, so there should be more demand, and as a result, of course there should be some buying activity in the real estate shares as well. Given the fact that the kind of correction they've seen, at least there could be some valuation comfort that investors could find in this pocket, but no such luck.
So yes, there is a valuation comfort. There are many new listing as well as capital raising is getting planned in the real estate sector. So that sector is also getting impacted because of a lot of new companies coming up with an IPO or in process of getting in process of raising further capital out there. I think mixed with that, first round of consumer spending took place on auto and other part of it. Real estate, it will catch up. I think still some time, probably next year, we need to watch out for. Pre-sales number are healthy, but not as exciting as what market was thinking about.
Hmm. Okay. Fine. I got your point. Last question, really. What do you make of the stellar run that we've seen in shares of Misho? Market cap hit that 1 lakh crore mark already. For a bit, the stock has doubled from its IPO price. It's just been not in 6 to 7 sessions. Do you think a lot of these future earnings have already been priced in, because there's nothing much left on the table for investors now? What's your sense?
Any of these shares, we need to wait for a 6 month period to see where actual valuation get emerge out there. Miso is a good company. They are profitable. Their business model is relatively far robust than many other new age companies out there. There's no two thought about that. Miso and Grow, I think the two companies, Grow is the best one among them, and Miso is another new age company which has really delivered very no very robust set of if I say the way they have structured their business. But actual valuation another part, we need to wait for 6 months when all the lock-ins and everything play out fully. Then probably we need to relook at the
Hmm.
you know uh, shares at that point of time. Uh, Post IPO, lot of things happens. We have seen with the Ola, we have seen multiple company. We have seen this sharp run
Hmm.
up. post IPO and then
Yeah.
stock cooling off post that period. So it's better not to play at that junction. Wait for some more time, and then probably you will get a some handsome return like Paytm if someone has able to
Hmm.
catch it from the bottom and then can make really good money. Similar happened with Eternal.
Hmm.
So I think it's better to. Many of these companies are having very good business model. Have like no the way they can deliver a future profitability looks very healthy. Like if you go back in 2002 to
Hmm.
7 period, the way Google turned around their profitability or Meta turned around their profitability in the US, similar type of trend we may witness with some of these companies. But here, more of a long term investor need to be there and at right valuations. We need to wait a little bit more, many of these companies.
All right. Okay. Wait it out for 6 months at least till the lock-ins, etc., are out of the way, and then perhaps look at these companies. But yes, Misho, as you mentioned, is already profitable, and a lot of experts have pointed out that it's a good company and a good business. But with that, we are timed out on this edition, on this segment. Ashutosh, thanks a lot for joining us this afternoon. I look forward to more conversations
Thank
and
you.
hopefully one before the year end as well. Thanks a lot for joining in this afternoon.
Thank you.
All right, that was Ashutosh Mishra sharing his thoughts about the market and of course all the other stocks and sectors that are in focus. But let's shift focus to what the markets are doing at the current juncture. We are holding on to the 25,800 mark, but one was hoping that we would snap out of the 3-day losing streak. That hasn't really happened. But still 6 odd minutes to go for the markets to shut. Let's see whether we can end with some green on the screen. But mid caps are managing to outperform today. 0.3% kind of gain on the Nifty Midcap Index, but the breadth remains poor, 2:3. That's the NSE Advanced Decline Ratio. The Nifty Bank Index, as we speak, has slipped into the red as well. So it's come off almost 300 points from the day's high. The Nifty itself has come off over 100 points from the day's highs as well. In terms of some of the mid-cap movers, let's see which are the stocks that are taking center stage. Of course, AMC stocks, after the overhaul of MF rules, are in focus. You have the likes of HDFC, AMC rallying in excess of 7%. You have NAM India, that's up 4%. Motilal Oswal from the brokerage universe also up 4%. A lot of these capital market plays are hogging the limelight today. But among other gainers, you also have Swiggy that has also seen a fair bit of correction. Today, it's up 2.5%. Crompton is another one that's gaining traction given the fact that there has been a brokerage upgrade that has come in, and Crompton, of course, reacting to that. The stock is up almost 3%. Interglobe Aviation, I think 5th straight day of gains, if I'm not mistaken. That stock is the top Nifty gainer as well. K Fintech is another one that's up 4%. PB Fintech that has seen a fair bit of weakness in recent times. That stock is up 4%. Hindustan Copper, that's another one. And HBL Engineering, that's also up somewhere around 4% or so. Let's take stock of some of the stocks that have hit 52-week highs, fresh 52-week highs. Hindustan Copper, Ashok Leyland, Hindustan Zinc, of course, has been on a gaining streak, and it has been a stellar move in tandem with silver prices. Silver, mind you, hit that $66 mark for the first time. So yes, Hindustan Zinc also rallying in accordance or in tandem with the silver prices. But Vedanta, that's another stock that's in focus that hit a fresh record high as well today. Of course, the demerger plan has got the go-ahead from NCLT, and even Anil Agarwal had made some comments and spoken to CNBC TV 18, wherein he said that, of course, all the debt of Vedanta Resources will also be retired pretty soon, and, pretty happy with the demerger getting the nod. In terms of other stocks, Federal Bank, Shriram Finance, these are some of the stocks that are seeing good buying traction and have hit fresh 52-week highs as well. But on that note, let's bring on board our technical guest for today. Joining me is Vishnu Kant Upadhyay, Assistant Vice President Research and Advisory at Master Capital Services. Vishnu, lovely chatting with you this afternoon. Just about 3 minutes to go for the markets to shut. Just want to understand, today we reclaimed that 25,900 mark. On the other hand, we made a swing low of 25,726 or thereabouts. Wide range of 300 to 400 points we have seen in the market. But do you think the resistance level on the Nifty has now shifted from 26 to 25,900? And how is it looking like today? Of course, Sensex Expiry was there and we saw a fair bit of volatility. How is the setup looking like for tomorrow?
Well, Nandita, very good afternoon, and thank you for having me on the show. Well, market has been very volatile in today's trading session. On the higher side, we have seen 25,900, while on the lower side, 25,726. So for last few trading sessions, we have been seeing market oscillating between these 200 kind of range. On the higher side, 25,900, which also aligns in the vicinity of 21-day exponential moving average, while on the lower side, 25,700, which is the vicinity of 55-day exponential moving average. But the good part is strength in Nifty mid cap and small cap, where we have seen mid cap is trading up 0.30%, while small cap is almost flat, but yes, in a green trajectory. So this is a good part. Apart from that, IT is also doing good, and banking index is also doing good. So after long, we have seen all major indices are trading in a green. Yes, in later second session, we have seen some selling from the higher levels. But yes, technically, if we talk, as long as we are trading about 25,700, our strategy will be buy the dip. But yes, you absolutely correct that on the higher side, 26 earlier were acting as a very good stiff resistance. But now 25,900 will be acting as a very good resistance, as this is a moving average, and moving average keeps shifted. Earlier, that was around 25,960, 970 odd levels, but now it aligns around 25,900. That's why market is again and again facing a selling pressure from the vicinity of 25,900.
Okay, that's about it. Of course, the resistance has shifted to 25,900. Okay, just about seconds to go for the markets to shut shop. We'll talk about individual stocks, but autos, they were out of favor today. But Tata Motors CV managed to do well, given the fact that there was an initiation. Bank of America Securities has initiated coverage with a buy call. Target price also higher at 475. We'll take stock of that in just a bit. Just about taking stock of how the markets have shut shop for the day. Extremely flat, but in the negative. Fourth straight day of losses. 25,800 thankfully has been defended on the lower side. So I think we should take heart from that. Sensex down 83 points. Mid caps managed to end the day in the green. That's a good sign. But the breadth not looking all that encouraging, 2:3, the NSE advanced decline ratio. So, even though the mid cap index ended the day in the green, portfolios wouldn't be looking as great. Bank Nifty ended the day in the red as well. That's come off 300 points from day's high. It was a volatile session given the fact that it was Sensex Expiry. That was expected any which ways. But in terms of sectoral movers, IT and PSU banks, I think PSU banks were iffy at one point in time, but did reverse course and managed to get back into the green. IT was up 1.5%. Metals also ended with mild gains. Real estate saw some green, but the sector has really been beaten out of shape. And every day we tend to see real estate index losing somewhere around 1 to 2% or so. From the losing end, you have pharma, autos, FMCG, even banks, of course, as I had already mentioned. So yes, it was a mixed picture across sectors. And in terms of the individual movers, Sun Pharma, that's one stock that was the top Nifty laggard. One of its key units came on USFDA radar, so the stock was reacting to that. The likes of Tata Steel, Power Grid were also out of favor. Asian Paints, that had seen some bit of buying in recent times, saw some profit taking. NTPC, L&T, Bharti Airtel, M&M and Bajaj Auto were some of the other losers, and even Tata Consumer, that stock has been doing well, but today saw some profit taking. Interglobe Aviation, TCS, Max Healthcare and some other IT names like Tech Mahindra, Infosys, Wipro on the gainers list. Hindalco gaining. Shriram Finance ahead of that crucial board meeting tomorrow. The stock hit a fresh high as well today, and some of these life insurance like HDFC Life are doing well. But good thing is that ICICI Bank, that was a big laggard yesterday, managed to end the day in the green, higher by 0.5% or thereabouts. But we were talking about Tata Motors, the CV side of it. BofA Securities has initiated a buy call. Target price at 475 rupees. Of course, there has been an uptick in CV cycle, and the CV end of the business is expected to pick up pretty rapidly from here. That's something that analysts have also been pointing out, and BofA Securities also has pointed it out. The stock has been doing well if you look at the last 1 week performance as well, and targets of 425 have been listed out by brokerages. What is the near term target here, and should one ride this up move that we are seeing in the stock of a Tata Motors CV?
Well, so definitely, this fundamental, update has been an additional tailwinds for the company. Looking chartically, stock is forming a higher high, higher, bottom kind of patterns, and on a graph, it is trading currently trading off the 21-day exponential moving average. So I believe, the bullishness in counter will remain intact on the higher side. I'm also expecting 430, 435 will be on card. So one should go long with keeping a stop loss below 390 on the higher side. 430 and 435 will be on card.
Okay, 435 on the higher side to watch out for on Tata Motors CV. But let's shift focus to a Sun Pharma as well. That was the top Nifty laggard. US FDA has classified its BASCA unit as official action indicated, and the unit was inspected between September 8th to September 19th. The unit continues to manufacture and supply approved products to the US. This probably is one of the most important facilities for new complex generics. So that's why I think the stock took such a knock, and given the fact that the stock has already been facing regulatory issues, right? Its Halol unit has been under US FDA import alert since June 2022, and of course the unit was classified as official action indicated in June 2025 this year itself. And Mohali facility also received the US FDA consent decree or non-compliance letter in 2023. After today's weakness, how should one approach Sun Pharma? Would you prefer generic names like Dr. Reddy's over it, or would you say that this weakness that we are seeing in the likes of Sun Pharma is a good buying opportunity?
Well, Nandita, so talking technically, in fact, today's move, shifted counter to a bearish trajectory, and I believe prices in today's trading session declined below its 21-day exponential moving average. Apart from that, there has also been a head and shoulder kind of pattern. So prices, declined below the neckline support. So currently, stock is looking to pave the way for 1700, 1710 kind of level. So for a short-term traders, I would clearly say avoid the counter. But for a long term, as long as stock is stay above 1690, this is for long term buyers. As long as stock stays above 1690, one can maintain a long position. But for short term buyers, one can avoid the stocks, because I'm expecting further decline in the counter that should be containing around 1700. So apart from Sun Pharma, you were talking about Dr. Reddy's, I think. So, but I think from a pharma pack, I would prefer to buy Aurobindo Pharma. Yes.
Okay. Aurobindo Pharma. All right. Got your point. Of course, for Sun Pharma, you can expect more downside going forward, but Aurobindo Pharma from the pharma pack is looking attractive in the charts. Let's shift focus to another stock that was buzzing today, and that was Crompton Consumer. Motilal Oswal has initiated a buy call. Target price is at 350 rupees per share. The stock of Crompton has been beaten out of shape, beaten black and blue, so to say, hammered out of shape, I would say that. In the last 6 months or so, it is down in excess of 25%. Today's up move, do you think it's just like a short-term bounce, or do you see any signs of the stock bottoming out and staging a recovery a meaningful recovery from here? What is it looking like?
Well, so after mildly witnessing a one-day move, we cannot turn bullish in the counter, because the stock has been a very beaten down and is still trading below its all key moving averages, that is 21, 55, 100, 200. So let's wait for some time. But if you look at a weekly or monthly chart, then you will find that 244 to 40 is a very crucial horizontal support. So one can go long with a risk reward, better risk reward possibilities. Because on the lower side, there is a 14 points decline from the present levels, while on the higher side, if prices holds to trade above that level, 240, while on the higher side, I would say 290, 310 kind of level can be seen in the stock. So yes, from a technical point of the view, we can go long in the counter.
Okay, you can go long in the counter. Risk reward, of course, looking attractive. Another counter that hasn't really done much, so to say, in the sense that it has been pretty sideways in the last 1 month. That's Voltas. The stock, of course, if you look at the YTD chart, it is down 25%. Did try to stage some recovery. 6 month returns is positive, but the stock has turned sideways, and there are some fundamental factors at play as well, right? Seasonal factors, AC demand, etc. And earnings wise as well, things haven't been very rosy for AC makers. But upgrade coming in, and the stock showing some kind of positive movement in the last 5 days. Do you see it picking up steam, or would you say it is expected to remain sideways here on?
Well, so as long as prices are trading up, it's a falling, trend line resistance that aligns around 1450. So I believe, this gain has been, attributed to the fundamental updates. So technically, if we're talking about let the prices move of 1450, so in that case, we can go long for the target of 1540. As long as prices are trading below 1450, so I would not prefer to go long in the counter.
Okay, you won't prefer to go long in the counter right now. But there's one stock that was, rallying in trade, and that was Antony Waste. Biggest single day gain since 2022, May 2022. And the stock, of course, has gained in 6 out of the last 8 trading sessions. Volumes were also pretty, brisk. Volumes were the highest since September 2021, but the stock is down over 40% from its July peak as well of 900 rupees or thereabouts. Is this momentum that we have seen in the last few sessions here to stay? And could it reclaim those levels of 900 pretty soon?
Well, so 900 levels, are too much for from the present juncture. In fact, this, as you quoted that again in today's trading session, 18% has been driven by some fundamental news. But yes, this momentum that has been immersed in today's trading session could be continued till 547 or 550 kind of levels. So one can go long for that level. But yes, I always prefer to say that any rally in the prices that has been accompanied by any fundamental news. So to continue that rally, there should be a momentum or buying in the counter. So I mean, prices could approach towards 550, but technically, if market prices wants to shift focus to bullish side, prices need to stay above 550 with a full conviction.
Okay, got your point. Let's shift focus to some stocks that were hitting all-time highs in today's session, the likes of Vedanta. Of course, Vedanta has seen a very good run along with the entire metal universe in the last 3 months. Of course, it's got the NCLT nod as well, and since then it has been really hitting 52-week highs, and today, of course, hitting fresh record high as well. Would you take a bet at these levels? Is the risk reward still looking on the attractive side, or would you say it's basically an avoid if it comes to getting into the counter at these levels?
Stock is looking quite good. Metal complex, entire metal block is looking quite good. So one cannot ignore this counter, but yes, one can enter in this counter in a scalable way. Right, 50% amount of buying can be done on a present level, while rest of amount of buying can be done on a corrective fall towards 540. So yes, one can go long in a staggered way.
Okay, go long in a staggered way when it comes to Vedanta. And what about Shriram Finance? The stock has done fairly well. Tomorrow, there's a board meet where they're considering fundraise as well. The stock has been on an upward trajectory. Of course, today hit a record high as well. How are you approaching Shriram Finance, and what about Bajaj Finance? Which one do you prefer?
Well, so talking about Shriram Finance, the stock has been a very perfect bullish, bullish run. And there has also been a news in yesterday's trading session then that one Japanese giant is, looking to buy a stake in Shriram Finance. So technically, stock is completely and decisively trading above the all key moving averages. It is completely forming a bullish ascending triangle kind of pattern. So I would say, yes, definitely one can go long in Shriram Finance for a long-term perspective. And I am, expecting 1000 or 1100 kind of levels in, coming months. Not talking about coming days, coming months, I can say 1100 and 1150 kind of levels we can see in Shriram Finance. And over Bajaj Finance, you saying so in between Bajaj Finance and Shriram Finance, my preferred pick will be a Shriram Finance, not a Bajaj Finance. It's a momentum picking stock, Shriram Finance, and Bajaj Finance currently in a consolidation phase. So I would prefer to avoid Bajaj Finance.
Okay, avoid Bajaj Finance and you prefer Shriram Finance when it comes to the NBFC space. What about these AMCs? All of them today were upbeat, but they have seen a fair bit of correction as well. They were reacting to the SEBI's mutual fund rules overhaul. But would you look at any of them, the likes of HDFC, AMC, or ABSL, AMC? You have NAM India as well. Here, do you see attractive risk reward after the correction, and now, of course, they have started to pick up steam again?
Yeah, definitely. I look at first name SDFC AMC, and I'm also very bullish on SDFC AMC. Apart from this, news that has been released by SEBI on AMC companies. Stock technically has also taken a very sharp U-turn from the proximity of 200-day exponential moving average. And in today's trading session, we have seen prices up around 7% and also settled the session above the 21-day exponential moving average. I believe this gain in the counter is likely to remain until, and on the higher side, prices are now all set for 2950. So yes, definitely one can go long because risk reward is in favor. On the lower side, one should put a stop loss below 2600.
Okay, that's about the AMCs. But talking about some of the mid-rung banks, likes of Federal Bank, Canara Bank, AU Small, all of them have done well. I think Federal Bank hit a record high today, if I'm not mistaken. Which one are you tilting towards? All of these banks have done pretty well.
Yes, undoubtedly. All banks, it's a tier 2 banks in private lender like Federal and RBL is also doing good. While talking about PSU lenders like BOB and SBI Canada, they all are doing good. But choosing stocks from all these private and PSU lenders, so I would prefer to go with a PSU, that is a Bank of Baroda. In today's trading session, we have seen a very good rebound from the proximity of 21-day exponential moving average, and I think this gain in the prices. One second. So I think this gain in the prices is likely to remain unimpaired, and prices are now all set for 310. So yes, in the banking counters, I would prefer to go with the Bank of Baroda. On the lower side, prices should stay above 280 to continue with is a bullish tone, and I believe it's a proximity of 21-day exponential moving average, and prices are unlikely to fall below 280. And on the higher side, 310, 315 kind of level can be seen in the counter very soon.
Okay, fine. Taking note of those levels, and of course, Bank of Baroda, that's looking good on the charts. But if you look at the IT pack, IT and realty have been among the biggest underperformers. If you look at the year gone by, IT, of course, was in traction today. For a positional play, if you were to look at some of the IT names, both from the large and mid cap space, which ones would you prefer?
Well, two counters. One is from a large cap IT and one is from a mid cap IT. So let's first talk about the large cap. So that's why preferred pick is a Tech Mahindra Limited. So in today's trading session, we have seen a sort of golden crossover between 55 and 200-day exponential moving average. Apart from that, since long prices have been trading below a falling trend line resistance multiple times, this resistance, trending line has been acted as a very crucial resistance, but today this has been violated with a good amount of buying. So I would say this buying bullish journey is likely to remain unimpaired. On the higher side, 1680 and 1720 could be on card very soon. So definitely from the large pack, Tech Mahindra will be my preferred pick. While on the mid cap ITs, there is a LTTS, L&T Technology Services
L&T
Limited.
Technologies.
This is also looking, yes, this is also looking good for a buy.
All right, Tech Mahindra from the large cap IT space and L&T Tech from the mid cap IT space. All right, before I let you go, Vishnu, any recommendations for our viewers for the coming weeks? Either. Thanks a lot. Well, those were the technical levels to watch out for and the stocks to watch out for, and some recommendations for viewers as well. But yes, it was a fairly choppy day on the Lal Street, flat close, but with a negative bias, mild outperformance coming in from the mid-cap end of the market, but breadth still, skewed in favor of declines. Sectorally, it was a mixed picture. IT was among the top gainers, and real estate saw some bit of green. Of course, this pocket has been on wobbly ground for quite some time, and year to date as well, the real estate index has shaved off over 20% or so. But since we're talking about technology stocks as well, let's talk about TCS. Take a look at why really it was in focus today. Shares gained in trade today. Of course, IT basket was itself doing well. At its annual investor day yesterday, the company reiterated its ambition to become world's largest AI-led technology services company, and for the first time, it actually disclosed key metrics to quantify the scale of its AI business. Of course, it has said that it has executed more than 5,000 AI engagements so far, and AI-related services have generated about $1.5 billion in annualized revenues. Now, this accounts for roughly 5% of the company's revenues, ahead of the 3% AI revenues that its peers have reported thus far. So, another important point is that its AI revenues are growing faster than the overall revenues, because it has clocked in a growth of somewhere around 16% on a quarter basis and 38% on a year-on-year basis in constant currency terms. Now, its new age services, including AI and cybersecurity, are contributing about $11 billion in annual revenues to the companies. And TCS, of course, has said that it is prepared to build capabilities both organically in data center related businesses and also pursue the inorganic path via acquisitions. Mind you, the recent acquisitions that TCS has made are List Engage and Coastal Cloud. Now, it also said that it has currently got an investable surplus of somewhere around almost $6.5 billion on its books. In terms of margins, the company has maintained an aspiration of the 26 to 28% band. It has said that its focus remains on driving growth with profitability while continuing to invest as well. Take a look at what the brokerages are really saying. Now, CLSA has an outperform call. The target price here is 3,559 rupees. It mentioned that TCS has disclosed its AI services revenue for the first time, and also said that TCS's AI strategy now rests on 5 pillars, including internal transformation, redefining services using AI, building a future-ready talent model, making AI real for clients, and developing a strong AI ecosystem. Meanwhile, Morgan Stanley has an overweight rating here. The target price here is 3,430. It says that TCS is strategically pivoting to offer a full stack of AI-led services, from infrastructure to intelligence as well. Nomura, meanwhile, neutral call, target price of 3,300. It pointed out that about 40% of TCS's portfolio is now in newer technology areas, where the company continues to maintain financial discipline even as it is investing for growth. Moving on to Jefferies, another hold call here. I think rest of them have had a buy call here. Jefferies has a hold call. Target price slightly lower at 3,100 rupees. And look at Nuvama, it has a buy call. Target price is at 3,650, and it is expecting TCS to be among the biggest beneficiary of a recovery in tech spending as well. If you look at TCS's performance, in the last 2.5 months, the stock has done fairly well. It has gained somewhere around 13% or thereabouts. But if you look at the YTD performance along with the other IT stocks, the stock is actually down somewhere around 20% or thereabouts, which is why experts are talking about valuation comfort emerging in some of these large cap IT names. Another stock that was in focus today was from the auto pack, the two-wheeler pack, so to say. Hero Moto, that stock was in reverse gear, given the fact that Jefferies has downgraded the stock to underperform from a rating of hold. Target price here has been cut to 4,950 rupees from 5,550 rupees. The revised target, of course, is implying a potential downside of somewhere around 15% from current levels. Now, the brokerage, of course, has said that it is constructive on the overall two-wheeler demand outlook, but the GST cut-driven demand boost has faded kind of if you look at the November and December period. It also pointed out that Hero's registration market share, which saw a seasonal improvement during the festive period, has started slipping again in December. I think that's one of the major reasons it has downgraded the stock. It also said that the stock, of course, has rallied as much as 40%, if you look at the YTD performance, and that according to the brokerage is has been driven largely by valuation expansion, and it has mentioned that at 20 times FY27 price to earnings, the valuations are actually appearing fairly expensive. In fact, if you look at the other brokerage, UBS, it had also flagged a sharp drop in the company's market share in early December as one of the red flags. If you look at Hero's market share, that fell to 19% in December, so far in December, compared to 35% in November. So that's almost halved, right? So since the GST reform announcement, if you look at the stock, it has rallied 20%. As I mentioned earlier, the stock has rallied 40% on a year-to-date basis, which is why some brokerages are flagging off expensive valuations, especially given the fact that some of those of the demand that we saw due to GST reforms may have started fading out a bit. But some experts believe that it's not for the short term, the GST overhaul, the GST rejig, the impact is here to stay for the long haul. That's what experts believe. So we'll have to really watch out for how things really pan out when it comes to market share for some of these names. But those were all the stocks that were on my radar this afternoon, and of course with that we've come to the end of this edition of Closing Bell. It was a very, very choppy session today, but let's see. Let's hope that we can, at least we ended above that 25,800 mark. So let's hope if we can stage some kind of a recovery like we saw in the, in the intraday session today. Let's hope that plays out tomorrow as well. But tomorrow is Friday, and it has been a busy week. So we are all waiting for the week to end as well. But with that, thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates, and have a lovely evening. I'll see you with the markets tomorrow morning at 9 a.m. Thank you.